It's a nice morning, students. We meet again for a session of financial reporting and analysis. So this is a session for the coming exams. That is 2022 March to April exams. That is for CPA students and for the guys who are attending from the other side of ICPAL, that is Rwanda. So we are going to do a question of conversion of partnership, whereby the conversion occurred at the end of the year, of which on my previous sessions and some of the uploaded videos in the YouTube account, I have done some of the questions whereby conversion occurred during the year, of which we have around 2 questions where conversion has occurred during the year, other than at the end of the year. So I want to do this question for this video pertaining when the conversion of a partnership occurs at the end of the year. So let us check the question of May 2018, question 3. So they are saying that that is question 3B. Janda Pet and Gidore are partners in a partnership business, sharing profit and losses in the ratio of 2 to 1, respectively, after allowing for a 10% per annum interest on fixed capital balances and a commission entitled to a partner. The trial balance extracted from the financial records of the partnership as at 30 September 2017 is set out below. So land and building at cost, motor vehicle at cost, office equipment at cost, furniture and fixtures at cost, provision for depreciation, investments, we have goodwill, inventories. So as we continue reading the question, so that is inventory. We were talking about, we have investments, we have goodwill, we have inventories, we have accounts receivable, we have accounts payable, bank overdraft, accrued expenses, we have the capital account, net profit for the year, that is September 2017, drawings, current accounts. So additional information, we are told that Gidore was the only active partner and was entitled to a commission of 15% based on annual sales revenue, which averaged shillings 20 million. The partners resolved to convert the business into that of a company to be named Chambeki Limited with effect from 1st October 2017 under the following terms. So investment comprised equity investment, which partners had acquired jointly. Each partner was to take over a portion of the investment equivalent to the profit share. The investments had a market value of shillings 15 million on 30 September 2017. Other assets and liabilities were transferred to the new company at the following agreed values. So you can see land, building, that is a motor vehicle, office equipment, furniture and fixture. Inventory at book value rests 5%. Account receivable at book value rests 2.5%. Current liabilities at book values. Goodwill was considered a valueless and therefore was written off. The purchase consideration on business purchase was agreed at shillings 250 million. The partners were to become shareholders. The company issued ordinary shares at par value of shillings 10 each to the partners to satisfy the balances due to them as at 30 September 2017. Upon incorporation, the new company issued new debentures at par, carrying interest at 14% per annum. The cash proceeds from the issue, amounting to shillings 50 million, were used to purchase additional stock of raw materials worth 15 million. Accrued expenses were settled in full. So they need realization account, partners capital account, Chambeki Limited's account to close off the partnership books. Number 2, we have the opening statement of financial position of Chambeki Limited. Opening statement of financial position of Chambeki Limited. So that is the question. So what you need to check is just a few things here and there. So remember that our financial year first ends on 30th September 2017. Our financial year is ending on 30th September 2017. So which means that it starts on 1st October 2016. Eh? It starts on 1st October 2016. So you need to check when did the conversion took place. And in our question, are we provided with net profit? Those are the two things we check, obvious in the question of conversion. The first thing, when conversion took place. The next thing, and the main one, are you given the net profit? Or you have to do the income statement to get the net profit. So checking on the additional information, additional information number 2, partners resolved to convert their business into a company to be named Chambeki with effect from 1st October 2017. 1st October 2017. So which means that 1st October is just 1 month. That is not 1 month, 1 day after the end of the year, which means that conversion occurred at the end of this period. Which means that now, in the next financial year, that entity will not be a partnership again, but it will be a company. In the next year, starting 1st October 2017, it will not be a partnership, but a company. So, another thing is all about now the main thing, so that you know where to start your question from. You check if you are given the net profit of the partnership. Was there the net profit of the partnership? You go back to your trial balance, which is provided. So checking at the trial balance, you can see we have the net profit for the year. For the ending 30th September 2017, the 91,000. So which means that now I don't have to do an income statement. And that one can again be seen from the requirement that you are not supposed to do the income statement. So in most cases, when you are not given the net profit, obviously they would tell you that you do an income statement so that you get the net profit. So the income statement will be part of the requirement when net profit is not provided. But now, since net profit is provided, you don't have to do the income statement to get the net profit of the partnership. So since the net profit is given, now where am I supposed to start from? That net profit must be shared. The first thing you do is now sharing the net profit to the partners before they convert this partnership to a company, under which statement the net profit will be shared to the partners. How will they share the profit? Under the appropriation account. We have to prepare appropriation account to show how the partners were sharing the profit before they converted that partnership to a company. But they will only share the profit after you have taken care of what was allowed. And that one you will be told from the question what was allowed. So you were told at the start of the question that Chanda, Pet, and Kidori are partners in a partnership business, sharing profit and losses in the ratio of 2:1. After allowing for a 10% per annum interest on fixed capital balances and a commission entitled to a partner. So those are the two things which are allowed: interest on fixed capital and a commission to a partner, and a commission to a partner. So now, doing my appropriation account, I will talk about the net profit. I will talk about the net profit, which is 91,000. So this one will be shared after we have considered what was around, of which I said we raise the items which are around. That is, but not all of them. The only thing we have to add back anyway is interest on drawing, if it was there, if it was around, but there is no interest on drawings. So in this scenario, other than interest on drawing, other items which are around, you deduct. So we consider the first thing which was around is interest on capital, the interest on capital. So the interest on capital, which is based on the partners. So Chanda Pete Kidore, so it was on 10%. Interest on capital, it's on 10%. 10% interest on. So 10%, that is Chanda Pete Kidore. You have Chanda Pete Kidore. So Chanda Pete Kidore, 10%, 10%, and 10%. So interest on capital is, that is 58,500. So 10% of 58,500, because you can see the capital is, the first one is 58,500. The next one is 37,000. And the third one is 31,500. So 10% of those three. So this one would be 5850. This one will be 3700, and this one is 3150. So you can add and give me the total of the interest on capital, which was around for the three partners. So if I add, I'm getting 12,700. So that one you deduct. Then the next thing which was around is all about the commission. So another thing you raise is all about the commission. This commission was based on what? Was based on, so let's check on the question so that we make that commission to be specific on what amount was it based on. So note one, you can see that Kidore was the only active partner and was entitled to a commission at 15%. So it was on Kidore, it was on Kidore, and it was on 15% on annual sales revenue, averaging 20 million. So 15%, so you say 15% times 20,000. So 15% of 20,000. So 0.15 times 20,000. So that is 3,000. So that is what you deduct at the end there. So after you have considered what is around, so what are you getting as the available profit to be shared among the partners? So let us deduct what is around. So let us deduct what is around. So I'm getting 75,300. So these are about now the profit available for sharing. The profit available for sharing. Profit available for sharing. So I'm saying this. The only item which can be allowed and you add back is the interest on drawings. The others which are allowed you deduct from your net profit. So then let's do now a profit share. Profit share. Profit share, Chanda Pete Kidore. Chanda Pete Kidore. It was based on which ratio? If the ratio is not given, remember that the Partnership Act comes into place, whereby the losses and profits are shared equally. If they never say on how to share in the question, the Partnership Act comes into place, whereby the profit and losses are shared equally. But this one, they say that partnership business sharing profit and losses in 2:2:1. They said that at the start of the question, 2:2:1. So that is 2 over the total, which is 5, 2 over the total, 1 over the total. So we share the 75,300, 75,300. We share the 75,300. That is what I'm sharing. So 2/5 times 75,300. So that is 30,120. 30,120. So the third one, a fifth of that is 15,060. So we can say that we have shared this profit of 75,300 among the partners. And that is now what the partners were getting individually as profit before they convert that partnership to a company. So once you are done with appropriation account, the next thing you do, I say, you do the current account. You don't follow the requirement, you just follow the way I'm telling you. Because by the end, you could find that you have done all the requirements the examiner was in need of. So for now, understand the way I'm doing the question. You don't follow the requirement. You follow the way I'm doing it. Because at the end, you will find that I have answered all the requirements of the examiner. So chanda pete kidore. By the end of this question, all the requirements of the examiner will be answered. And you will be able to understand to do this question in a simpler way. So chanda pete kidore. So after the appropriation account, now you do the current account. So the current account, you start with balance brought down. So which is the balance brought down here for the current account? So you can see the current account, you are given 2,800 for Chanda. What about Pete? 18,200, eh? Then 13,300 for Kidore. You can see that from the statement which was given. Then now the items from the appropriation account are the one which will be taken to the current account. So interest on capital, that is 5850. We have 3,700 and we have the 3,150. We have the commission, and this commission was only to Kidore, who was the active partner. So it was based on sales revenue. Then profit, the one we have shared, 3120. We have 3120, and we have 15,060. 15,060. So the only thing I could have debited here is drawings. I think it is there. And if there was interest on drawings, which was around, interest on drawings. So there was no interest on drawing, which was around, but there was drawings in the question. That is the one I need to debit. That is the one I will debit. So drawings, that is 7,800. We have 6,500, and I have 3,900. I have the 3,900. So the balancing figure from these accounts, the balancing figures from these accounts will be attributable to capital account. Will be going to the capital account. Let us check what are the balancing figures from that account. Let's start from Chanda. So 2,800 plus 5,850 plus 3,120. So this is 56,770. So this one is supposed to be here. So you minus 7,800. So this is 48,970. So the balancing figure, 48,970. So let us do better. 18,200 plus 3,700 plus 3,120. That is 52,020. So here it's supposed to be 52,020. So the balancing figure, if we minus 6,500 here, I'm getting 45,520. 45,520. Then the last one, 13,300 plus 3,150 plus 3,000 plus 15,060. So that is 34,510. 34,510. So 34,510 minus 3,900. So that is 3,610. The 3,610. So after you are done with your current account, now the next account I will have to prepare in this question is now the realization account to check on how the assets and liabilities were taken over by the company. on how we closed them. Anyway, on how we closed these assets which were taken over, on how to close the assets which were taken over and the liabilities which were taken over by the company. So remember that here we are now doing the closure of the partnership books before we open that of the company. So under the realization account, specifically, it will be showing how we closed the assets and some of the liabilities accounts, which were taken over by the company, by the company. So you will be guided by the additional information on the assets, and the liabilities which were taken over by the company. So they said that in the additional information, from additional information number 2 going onwards, they said that the partners resolved to convert their business into that of the company to be named Chambeki Limited with effect from 1st October 2017 under the following terms. So investments comprised equity investment, which the partner had acquired jointly. Each partner was to take over the portion of the investment equivalent to the profit share. The investment had a market value of 50 million. So the investment itself first, the one which was partners taking. So we have to close the one which is in the partnership books. So the additional information will give you a guidance on which assets were taken over and which liabilities were taken over, so that we close those assets which were taken over based on the figures in the partnership books. So the investment in the partnership, if you check on this trial balance, the investment here is 44,800. When you close an asset account, am I supposed to debit or credit? What you need to know that assets, specifically assets, in a normal way, assets are debited. So to close the asset account, you credit the individual asset account. You close the individual asset account by crediting the individual asset account, then you debit realization. So in short, with all the assets which were taken over, you debit the realization account using the figures in the partnership. It's only that now the additional information will guide us which of these assets which were taken over. The first one is investment, which I need to debit my realization account. So investment, so it is at the figure in the partnership, the way it was stated in the partnership. That is 44,800. Another assets which were taken over here, which I need to debit so that I close them, because once I have debited realization, I credit individual asset account. But now I'm not preparing individual assets account. It's just you need to know in your mind that that is the relevant entry which can be done. Number 2, you can see there is land and building. Again, we debit land and building. We debit realization. So land and building, the figure in the trial balance is 123,500, but you need to deduct. You need to deduct the depreciation. So it has to be at net book value. So that is a 123,500 minus depreciation of building. Provision for depreciation of 20,150. Of 20,150. So 123,500 minus 20,150, that is 103,350. That is 103,350. Then the next asset you can see here, the third one is all about the one which was taken over down there. So anyway, I can now record them, then I will display on the other end. We have the motor vehicle. The motor vehicle, the figure in the trial balance is 8,600 minus depreciation of 54,600. the 54,600. So that is 8,600 minus 54,600. So this is 26,000. That is 26,000. Another asset is all about which one? Other than so we have done land, motor vehicle, then we have fixture, we have office equipment. So the office equipment is 7,200 minus depreciation of 24,400. Then down there, another asset which was taken over is, other than office equipment, we have furniture and fixtures. Furniture and fixtures. So the furniture and fixtures. So in the books, that is in the books of the partnership, that is fixtures and furniture, that is furniture and fixtures, 52. We minus depreciation of 18,500. 18,500. So we have 70,200 minus 24,400. So this is 45,800. And we have 52 minus 18,500. So this is 33,500. Which are the assets which are remaining? The other assets which are remaining. The one which were taken over. It's based, remember, on additional information number 2. We have inventories. So this 5%, it will never affect you at this level. Remember that you are supposed to write just inventories. You pick the way the figure, the inventory is stated with in the partnership. So the inventories is 20, that is 31,200 in this partnership inventories, 31,200. Then another one here is all about accounts receivable. So receivables is another one. So receivables is stated in the books of the partnership, but what figure? 25,400. 25,400. Then another one here is all about current liabilities. So we are done with assets. So we have debited assets. So we have debited assets in the realization account.
What about goodwill?
Goodwill was considered valueless.
It was various.
It was considered valueless. It was considered valueless. That is what they have said. So to be written off. Goodwill was considered valueless and therefore written off. It will not affect this account at that level because it was to be written off. So the next thing is all about these current liabilities. Current liabilities, so it means that to close a current liability account, you debit the individual liability account, you credit realization. You credit realization. So which are the current liabilities? We have to credit realization here. So the current liabilities we have payable, bank overdraft, and accrued expenses. These ones here. Payable, bank overdraft, and accrued expenses. 62,400, 17,550, and the 4,000. So let us record them. So we have the payables. So 62,400. We have bank overdraft. We have the bank overdraft, that is 17,550. And we have the accrued expense. So accrued expense was 4,000. So after that, what you include here is all about the purchase consideration. what you can credit here. Purchase consideration and the investment which was taken over at market value, of which it will reduce our capital. So the purchase consideration, you credit realization account, of which at the same time it will be debited. It will be debited under the Njambeki limited account. So you credit realization, you debit the Njambeki limited account. For the investment, which was measured at the market value, other than the one we have closed in the partnership books. Remember that they said the investment in this additional information number 2 at the start, the investment which was taken over. So the investment comprised equity investment with the partners that acquired jointly. Each partner was to take over the portion of the investment equivalent to the profit share. So now the investment was measured at market value of 50 million. So that investment at market price, what you do, you credit the realization, you debit the partner's capital account. So those are the only two things which were a bit challenging on how to deal with purchase consideration and the investment at market value. So I've said for the purchase consideration, you credit this realization, it was 250,000, the 250,000 here. To 50,000. Then the investment, again, I will talk about it at this point, the market value of 50,000, of which this purchase consideration, I will take it to the Njambeki limited account, I debit. Then I check if what the partners were being given as shares is equivalent to the 250 under the Njambeki limited account. For the investment, it will reduce our capital. Under the capital account, you debit. You debit. The goodwill you are talking about, Corings, remember that goodwill will again affect our capital because it was a negative. It was considered valueless. So we have to reduce our capital by debiting the capital account with that negative goodwill because it was something which was valueless. So, but now as a student, you can never miss, like now in this account, you are supposed even to score everything because even the entries I have done for assets and just for the liabilities, they are enough to give you enough marks if they were asking you to do the realization account, of which I know it was one of the accounts which was required. So then you can balance the account, then the balancing figure will go to capital account, to capital account, of which the balancing figure would be shared between Chanda Pet and Kidore in the ratio of 1. Yes.
Where is the 50 from investment coming from?
The market value of the investment.
Okay.
Note 2.
Okay. Note.
There are sentences there at the start of note 2 where they talked about investment.
I've not yet located it.
Sorry?
I cannot locate it.
Let me show you where it is coming from. So just a minute, I balance this account. So this is the one here. This one, they say it under this investment comprised equity investment, which partners had acquired jointly. Each partner was to take over the portion of the investment equivalent to the profit share. Investment had a market value of 50 million.
Okay. Yes.
Yes, that is fine. So add the debit side, the total figures for the debit side. Then we balance 103, 350. 103, 350. plus 26,000 plus 45,800 plus 33,500 plus 31,200 plus 25,400. So that is 383,950 minus the answer. So I'm getting a balancing figure of 73,900. So that is what I share here. I think you know I'm getting this balancing figure. After getting this total, then I added this. So the difference, the total of this and the 383 is the one which is 73,900. So that is the one we share. So this one is 29,560. 29,560. Then the last one, 14,780. So the 14,780. So once I'm done with the realization account, now we can do the partner's capital account, and that is now the last account to close under the partnership. Under the partnership, so that we check what are the capital the partners will be given. Now, in the company, they will be shareholders. In the company. So now the partners, so let us draw the partners a capital account. So for the partners capital account, Chanda, Petro, Kidore. So the balance brought down. Balance brought down under the partners capital account. So from the trial balance, 58,500. So after other than 58,500, 37,000, and we have 31,500. 31,500. So if you cannot trace those figures, they are here. Let me display. So these are the figures which you are given. The capital. So the capital is here. Capital account 58,500, 37,000, 31,500. So what about the current account?
$48,970.
48,970. Now the balancing figures from that account we did. We did the current account. I said that I would be closing these figures to the capital. So 48,970. We have 45.
45,520.
45,520.
36,10.
36,10. Then realization, even those ones goes to the capital. 29,560. So again, the one we have just done some minutes ago, these balancing figures here. 29,560, 29,560, and 14,780. So 29,560, 29,560, and we have 14,780. Yeah, 14,780. So now I said what to debit. The first one is investment, the one I talked about. So it was 50,000. If you share it in the ratio of 2 to 1, you get 20,000, 20,000, and the 10,000. Another thing I said is all about goodwill, the one which was valueless. It will reduce our capital. So the goodwill from the trial balance was, the goodwill from the trial balance, 26,000. Share it in the ratio of 2 to 1. 26,000. You can see this from the trial balance there. 26,000. Share it in the ratio of 2 to 1. 2/5 times 26,000. That is 10,400. 10,400. And the last one is 1/5 times 26,000, which is 5,200. So that the balancing figure now under the capital account would be what? Shares, ordinary share capital, in short. Ordinary share capital to the company. Ordinary share capital to the company. Now partners will not be partners again, but maybe they can be shareholders holding an amount equivalent of the balancing figure in this account. So you can add and give me the figures. 58,500 plus 48,970 plus 29,560. So that is 137,030. So 137,030. So you minus 30,400 because the total of the two. So this one will be 106,630. The balancing figure after taking the total, you minus these two. So the second one, 37,000 plus 45,520 plus 29,560. So that is 112,080. So the total is 112,080. So we minus 3,400. So this is 81,680. Then 31,500 plus 30,610 plus 14,780. So that is 71. 76,890. So 76,890 minus 10,000 plus 5,200. So that is 61,690. 61,690. So obvious, up to that point is when you go now and do the income statement. When you do not income statement, that is when you go and do the statement of financial position. But now before we do the statement of financial position, let's check maybe what is remaining according to the examiner, what he was requiring us to do. according to how I have done the question, I never followed the requirement. But what he was asking me is to do the realization. I have done that. He was in need of partner's capital account. I'm done with that. Then another thing you need is Jabeki Limited account to close off the partnership books. So Jabeki is the only one which I need to do. So Jabeki Limited account, very simple account, whereby I said you debit purchase consideration, which was credited in the realization account. So the purchase consideration was 250. This is the amount which the company was paying as consideration to the partners. Then we credit the balances from the partners capital account, because now once the partners goes to the company as shareholders, they would be given an amount worth 106 for Chanda, 106, 630, this one, 81, 680, and the 61, 690. So you need to check if this amount is balancing automatically. If it doesn't balance automatically, you are wrong. Because the purchase consideration the company is supposed to pay is supposed to be equivalent to the capital maybe which they could have received under the company. So 106, 630, 106, 630 plus 81, 680 plus 61, 690. You can see I'm getting to 50,000 and it's okay. So it's balancing. This account must balance automatic. Automatic. Then there are, so you have done all the accounts of the first part of the, you have done all the requirements. So you have your 10 marks for the requirement 1. So another working maybe I can do before I do the statement of financial position, and a working is according to note 3 here. Note 3, they were saying that upon incorporation, the new company issued a new debenture at par. So now once a new company is formed, remember now we have closed the partnership. We have already closed the partnership. That is how our partnership is closed. So they are saying that upon incorporation, that is note 3. Upon incorporation, the new company issued a new debenture at par, carrying an interest of 14% per annum. The cash proceeds from the issue amounting to 50 million were used to purchase additional stock of raw materials, worth 15 million. Accrued expenses were settled in full. So there was a debenture which was issued to raise some amount, of which they raised 50 million. So the cash proceeds from the issue was 50 million. They used this 50 million to do what? They purchased the raw materials and they paid accrued expenses. So we need to check which cash did they remain with at the end after they paid those raw materials and some of the other things. So we need to prepare a cash book account, because once they issued, we need to prepare cash book account, because once they issued that debenture, issue of debenture, they raised 50 million. They raised the 50 million. So which obvious on this scenario, if there was any bank overdraft, it must be paid first. Even if before they pay other things they were told to pay. Remember, if you have a negative, a credit, that is a credit bank balance, you have to settle that before even you pay for the raw materials and accrued expenses. There was an overdraft which was there in the trial balance of 17,750. That one must be settled first. Because once you have an overdraft and the money comes to your account, that is the first thing to be deducted. Then they say that they purchased raw material, purchase of raw material. So I would say RM, raw material. They paid 15 million. So I would just reduce it to thousands, 15,000. And they paid accrued expenses. They paid for the accrued expenses. So the figure for the accrued expense is, is 4,000. You can see that one from that trial balance. So we need to check they remained with which cash. Walipaki na pesa ngapi? In Swahili we say that. Corings.
Yeah.
You know that?
Yeah, the balancing figure.
The balancing figure. Ndio ile pesa walipaki nayo. Ama namna gani? You can't answer.
Nisikia. Lakini kujibu. Kujibu niyo shida.
Oh.
Yeah.
So 17,750 plus 15,000 plus 4,000. So that total is 36,750. So 50,000 minus the answer. So the balance they remained with here as cash after they paid bank overdraft, they purchased raw material and they paid accrued expenses. The balance they remained with is 13,250,000. Remember, our question is in terms of thousands. These figures, in short, I'm recording is in terms of thousands. Even the others have been recording is in terms of thousands. So finally, now we can do the statement of financial position, which is just a walkover. Even if 10 minutes remains to your end of the exam period, let's say you are in an exam room and you have not done this question completely, then you hear the examiner say 15 minutes remaining. This question can be done, by the way. You can score, you see, under the marks of under these marks of what? These marks are around 17. You can score 10 in 15 minutes. Because the realization account, you can do it just copying the assets which were taken over on the debit side, you record the liabilities. That is the realization account. For Nchabeki Limited account, you debit the 250,000, you just leave the credit side. That is 1 mark. 1 mark. So for the first one, you can get around 4 out of 10. That is when you have no time. Then for the statement of financial position, you can get 7 out of 7. Because for the assets, you just copy the one which were taken over the way they are here. Under note 2. If it's liability again, you record the way they were taken over. So you can score everything for the statement of financial position within the shortest time possible. So let's now do the opening statement of financial position. So remember that this is Nchabeki Limited statement of opening statement of financial position. They are saying opening statement of financial position because now it would be as at the start of the new year, which is 1st October 2017. Because we have closed the partnership by 30th September 2017. So for the non-current assets, for the non-current assets, you realize that under additional information, there's land and building. It was taken over to what value? 115,000. I'm just copying the figures from the question. The way now they were taken over. This additional information number 2. Motor vehicle, you can see it was taken over 25,500. Office equipment, that is another thing you copy. It was taken over 43,500. That is what I meant when I was saying that you can score the 7 marks because it's the work of copy and pasting in the answer sheet. So we have furniture and fixtures, 29, 550. Eh? So the 29, 550. So that is what I've recorded first. Then I have to check the goodwill of the company, other than the one in the partnership which we cancelled out. And now we need to check the goodwill of the company. That is our working we have to do to get the partnership, to get the not the partnership, to get the goodwill of Jambeki Limited. Because the one for partnership, remember the partnership already, I'm not even supposed to talk about it because the partnership is already a thing of the past now.
Excuse me.
Yes.
I thought in the statement of financial position, we take book values, net book values, no depreciation deducted.
There's no depreciation there to deduct. Where is the depreciation codings now here? Remember these figures were taken over.
I mean the accumulated one in the trial balance.
No, you cannot go back to the trial balance again. The trial balance was the figures for the partnership. We closed that. We closed. Remember that when I was doing the realization account, what was I doing? Do you remember me doing the realization account?
Yeah.
The assets which were taken over, I was just checking, for example, land and building. I closed it under the way it was recorded in the partnership at net book value. See, I was taking 123,500 minus the provision for depreciation. That is what I did here when I was closing those assets under the partnership. Those were closed under the partnership. See, we did that under the realization. Yes, now we are doing the company books. Or with the company books, those assets were now taken over at the figures stated in those additional information. Because they said that they said that under the additional information that other assets and liabilities were transferred to the new company at the following agreed values. So those are the values I'm just recording when I am preparing the statement of financial position of the company.
Okay.
So I've already recorded the assets. So I've said goodwill, we have to do our working. So what we do is going to the current assets. What we do is the current assets. So for the current assets, inventory. Who can tell me on how to record the inventory? Inventory will be they said inventory at book value. You can see raise 5%. So the company took over the inventory at book value, raise 5%. So it would be at 95% of the book value. 95% of the book value. 95% of the book value. Book value was 31,200 there. That is now the point whereby they are guiding me to go back to the trial balance because they are saying at 95 raise book value. So it would be 95% of 31,200. Then I add raw materials which were purchased. Raw materials are stock. When they issued the debenture, see, they purchased raw materials. So this one would be 44, 640. Then another asset we need to record is debtors or the receivables, so which is the current asset, of which they said current assets right now, the accounts receivable at book value, rest 2.5%. So receivables will be at 97.5. 97.5%. Times what? The book value. The book value, that is now the point they are guiding you to go back to the figures stated above there, 25,400. So 97.5 because they have said rest 2.5. So 97. So 25,400 times 97.5. That one would be 24. 765. 24,765. Then there is the cash book we did. The remaining balance was 13 something. 13,450. The cash book we did is a working we did. The working which was pertaining the issue of debenture. It's here.
It's 250.
Yes, 250.
13,250. 13,250.
13,250. 13,250.
13,250.
So let us confirm again that account. So 17,750 plus 15,000 plus 4,000. That is a total of 36,750. So 50,000.
50.
So is there anything I have not recorded well? So this one was bank overdraft was 17. You can see the bank overdraft is 17,500.
Yeah.
550. So which means that our answer here will change to 4.
Mm.
Yeah. So up to that point, we have the total assets. So then equity. Remember, you have the ordinary share capital. From which account?
Capital account.
From the capital account. So the 106. 106, 630 plus 81, 680 plus 61, 690. That is 250,000. We got the 250,000. Then we talk about non-current liabilities. There was that debenture, 14% debenture with the issue there. The one for 50,000. Then current liabilities. We have the payables. So the payables, if you check from the question is, remember they talked about current liabilities being taken at book value.
Mm.
Yes, so book values of those current liabilities. Which current liabilities can you see there? Payables of 62,400. We have a bank overdraft and accrued expenses. But will I record bank overdraft and accrued expenses? Would I record them?
I don't think he'll record.
Because they were already settled.
Yes.
Yes, they said that in note 3. And we did that in the cash book account. They were already settled. That is what I did in my cash book account. Once the debenture was raised, there was these accrued expenses and the bank overdraft, which already was settled. So the last thing I have to do is all about goodwill. How do we determine goodwill callings?
Purchase consideration. Then if there is any fair value, you add it there of NCI. Then you less the share of net assets. Then
So
when there is a impairment, you just deduct it.
that is fine. So here, so purchase consideration, I will say is equals to goodwill is equals to not purchase consideration. Goodwill is equals to purchase consideration. You minus net assets. Purchase consideration minus net assets. So purchase consideration was 250. Remember that. So net assets here, it's all about assets. On this question, it's asset minus liabilities. You take your assets, you minus liabilities. So you add the assets. Just add the assets. So assets are these ones, up to the current assets. So we have 115,000 plus 25,500 plus 43,500 plus 29,550 29,550 plus 44,640 plus 24,765 plus 13,450. So I'm getting the assets total figure of 296,45. So 296,405 minus the liabilities are just these two. So it will be 112,400, the total liabilities. So I minus from 250,000. So which answer will I get there? So if I minus 296,405 minus 112,400, that is 184,005. So 250,000 minus the answer. So I'm getting 65,995. So 65, that is what I will put here. So obvious, if I take my 65,995, I add with the other assets, I know the total. It was 296,405. So my total assets here will be 362,400. The 362,400. Then for the liabilities, 250,000 plus 112,400. So you can see it's 362,400. And that is how you are supposed to do this question, whereby the conversion of the partnership was done at the end of the year. Unlike the one we did last time, whereby the conversion took place during the year, not at the end of the year. So that marks the end of the question and marks the end of the session today. If you don't have any other question, you can put in a close or any concern.
So when you look at the other table of contents I sent you, actually all what you have studied is under company law. All this. So maybe you look through and maybe you can make a comment on in that table of content I sent you, according to ICPAL.
Under the company law, under the company account.
Yeah, it is under company accounts. Yeah, it's I think the last chapter, the last or second chapter.
I will make a comment on the same.
Because for us in that book of ours, there is no calculation. It's just the theory part and some few small examples.
There's no calculation.
And yet, Yeah, the calculation that is there is actually too simple, but much of it is theory. And when you look at the exam, they bring in computation of like this nature.
Oh, that is fine then. So now you have read the theory, now you have done examples with CPA.
Yeah, of course, the theory I have not, have not read. You know,
Yeah.
that book is so huge. It's very wide.
Yes, I realized that it has a lot of pages.
Yeah, a lot of things, and you need to have someone. That's why I'm saying if you can read through, then you can maybe make a comment.
Oh, it's okay.
Maybe guide me on how, because this one is okay. When I revise and do some questions, I found that they are relating
that is
to what we are doing in the exam. But of course, in that book, there is a lot of theory, a lot. Sometimes you even lose direction when you're reading it. I don't know whether they were just copying it from somewhere and just pasting, but it is too much.
They need to hire more professionals to simplify that book.
Yeah, it needs some fine tuning. That's why I sent you those past papers so that when you read through, then you look in those. By the way, you can even develop a very good book, and you just become a champion here, because people are lazy to read all those thousands and thousands of pages. You can develop just materials specifically for exams out of that book.
There's no revision kits. There's no producing revision kits.
No, we don't have them.
So if I do the solutions to those questions, I can make books to sell as revision books.
Very much, very much. Even I would be buying now.
That is an opportunity I'm sleeping on. So the likes of Dennis can be my right-hand man.
Yeah.
They can assist in that. But my first job I started before I started this aspect of teaching is all about editing of CPA books.
Mm.
Yeah, so there's books I was editing, so I cannot mention which are the publishers of those books in this platform anyway. So that is the first thing I started with, editing of books. So we were writing books. There were people who were developing books. Then we edit. So at the same time, there's a book I wrote, which was even published for the advanced financial reporting, the study text.
Yeah.
I have even the soft copy of the same.
Yeah.
Yeah, so that is the work already. I know it can earn. It can earn a good return if someone starts capitalizing on the same.
Very much, because we have many clients on this course. Very many of them.
Yes, that is an
so
opportunity.
You guys, we have to link together. That's why I'm insisting. We can link and make a branch here. Then you have the headquarters in that end. We are just practicing what we are studying.
Exactly.
And we do it online.
And
you
you are
just
on
come here, just ready for auditing.
And since you are on the ground, at the same time, you are on most of the clients. Like now, if I come to the university with my books, so I would be able to get
exactly.
Most
of them will just divert to you.
Oh, because you are in the university and you have that opportunity to give me a direct ring in the university. University of Rwanda?
Yeah. Yeah.
It's like now the university.
You just sell some copies and then you see how people will be coming to you.
Oh.
So that's why I'm crying even for this management accounting. I was asking Dennis is not having it. I don't know, Agnes and Delphine. I need support for sure.
I told you I was to give you someone who can give you the videos.
So you have to support me for sure now, because it's the only one that is disturbing me. When I just finish it, I just jump to advanced. You know, ICPAR has advanced 1 and advanced 2.
How?
Yeah.
How does it become advanced 1 and advanced 2?
we have intermediate. There is level 1, level 2, that is foundation. Then from level 2, you jump to intermediate. Then from intermediate, you just go to advanced level, which has 3 papers. Then the second advanced level, which also has 3 papers. But all in all,
is there a project
the same.
Any project to be done?
Yeah, no.
There's not any project you do?
No.
Right now in Kenya, they introduced the CPA with CASNEM. They introduced the business data analytics project.
Yeah, that is a good one. I like that.
Yeah, so that project, I think, once you are done with the advanced level, you have to do it. And at the same time, some workshops which will be arranged in partnership with ISPAC. So anyway, that is a good insight you have given to the other students on how the exams are done from your end. If they get there one day, I think they know now. What if you do CPA, then can you be given the one for ICPAL? Corings? Corings, it's like no, he's not hearing me. Anyway, we will continue from there to tomorrow. We do another question. Still, we are under conversion. I need to do 2 more questions. The one which was done last sitting. And there's a question I gave out. Have you tried that question? Agnes, Dennis. Have you tried the question I gave out yesterday? Agnes and Delvin.
Not yet.
Delvin, have you been in this session since we started?
Yeah, as from Tuesday.
Not from Tuesday, for today's session. You were there from the start of the class?
Yes.
Oh, I never realized that you were around.
I was around.
Oh, okay. So let's meet tomorrow. We continue from where we have left. So that we do more questions. That is the 2 questions I have mentioned about. The one I gave out, whereby conversion occurred during the year. And I need to do a question of Rasiti. Have a good day and a good time in your revision.